Hey everybody, Lawrence from Financial Thing here. Let me know if you can hear me okay, because we updated the software and I don't know if I don't know if the audio is working like it normally is, but let me know. Anyway, glad to be here on a Thursday. Usual stream every Thursday evening. I think the audio is working okay. Welcome. Hope you're having a great week so far. We have a lot of information to go through today. We have, let's see, what are we talking about today? We got some peer-to-peer lending news, of course. We are going to be going through some live trades today. Going to be doing some trading 212 purchases that I really need to get done today, so I figured why not do them on the live stream. We're going to be hopping back into the oil and energy market. Pop your location where you are in the comments. It's always nice to see where everybody is tuning in from. Hope you find this hour, hopefully it's an hour. Try not to go over an hour, but hopefully you get a lot of value out of this. And thank you so much to everybody who's become a Patreon supporter. Things are definitely changing in the financial world with the FCA getting involved in the way that compensation works within the industry. So Patreon is becoming an important key to this channel. So thank you to everybody that has supported with a sign up for as little as a 1 cup of Costa coffee plus maybe a muffin a day. Actually a month, sorry, not a day. Very cheap. So if you're interested in checking it out, snap that. We'll go in the link, the description below. We're going to be talking about some what's going on with the Fed in the US. I want to show you something very interesting, which I've been thinking about with the economic news. Please hit the thumbs up, by the way. What is going on with the Fed? The US Fed has $8 trillion, I think it's like $8.9 trillion of assets on their balance sheet right now. And recently in the news, they were talking about they're going to sell these assets off. That's going to be part of their tapering, so to speak. So I was doing a little bit of research on that, and I think this is going to be a very important part of what's going on in the economy and what's going to happen to the stock market, and something very important to pay attention to. Obviously, we don't have a crystal ball as to what's going to happen with the markets, but obviously any type of interest rate hike by the US Fed really has a global impact, and we need to pay very close attention to that. But anyway, a quick hello to everybody in the stream. We're going to run through quickly. Invest22, nice Harley Davidson. Thank you very much, Invest22 in London. Yeah, if you haven't checked out the last, I actually put a motorcycle video talking about finance, something I've been wanting to do for a long time. You know, I'm not the best at talking off the cup, but I got to combine two things that I really like to ride, my bike, and chat about finance. So if you want to go back and check out that video I just posted, and there'll be a new one posting tomorrow, a second video, but I'll be doing more of that. Definitely more uploading on the YouTube channel. Alan Toombs is here in Basingstoke. Mr. Chimp in Cambridge. Darren, hi, nice to see you. Aki Chap, of course, in Accrington. Colin Perry in the Peak District. Philip Waters from Milton Keynes. John Day in Nottingham. Dave Allen, Chile Midlands. By the way, it's 84 degrees here today in Orlando. It's very muggy. Not to make you feel bad, but it's just the way it is. Alan Pates is here from a very cold, Robert Pates, wet and cold Crete, Greece. Peter Vince, evening all from the Leatherhead, dry and mild, very nice. Double D is here in Barliston. Dave Dawson, hi, nice to see you, Dave. Paul New in Stockport. Alaba Nyron, back in sunny Spain after a sad trip to the UK for a family funeral. Money ain't everything, folks. Let's all be mindful of that. Hey, what a great comment, Annabelle. Thank you for posting that. It's extremely important that we think about that. Hopefully, funeral's always a very sad thing, so I'm very sorry to hear that. Vlad Petrov is here. Very chilly, northern Illinois in the U.S. Stephen Hale in Nottingham. Mark Mason coming from chilly Athens, Greece. Nice to see you, Mark. Very glad you are here. Who else? John Cutler in Blackpool. one of my childhood hangouts, Alan Stratford in Worcestershire. And I have a question for everybody. I would love to see, if you were going to move out of the UK to anywhere in the world, where would you move to? Pop in the comments. I like it. Gary T. in Lincoln. Welcome, Gary. Brian in Woburn, of course, in Central Bedfordshire. Darren Lefkoe in London. George Batchelor from Bridlington. Hi, George. Nice to see you. And who else? I think that's everybody we got right now. So welcome. Let's get right into it. Maybe talking about stocks today. Yes, Facebook has dropped 25%. For everybody who says crypto is volatile, we've got one of the biggest stocks in the market, period, drops 25% in one day. If that isn't volatility, I honestly don't know what is. Anything can be volatile. Don't forget to go to Financial Thing. I have updated this LendingWorks article here. LendingWorks closure, in my experience, after 6 years of investing, we do a little LendingWorks update on there, and of course all the other information about index trackers and peer-to-peer lending. Let's get right into it. Irish peer-to-peer platform allows lenders to invest with cryptocurrency. The Irish peer-to-peer lending platform Esketit. I mean, I had to double read that because I just couldn't get the name. Am I saying that right? Esketit? Anyway, they've added two stable coins, USDC and USDT, which is the Tether stablecoin, so that lenders can invest in loans using their cryptocurrency. As well as euros, lenders can invest in their Esketit accounts in USDC and USDT stablecoins. And then those stablecoins will be converted to euros. You know, what's the funny thing about cryptocurrency, right? So detached from money, yet you need fiat money to buy it. It's kind of ironic. When withdrawing funds from the platform, the investment can be converted back to USDT or USDC. And they say while stablecoin staking can bring returns of under 10%. Remember, we talked about staking a couple of weeks ago, where I've been doing more staking recently, and it's a great way to get yield on stable coins, even though regulation might be around the corner, which I don't necessarily think is a bad thing. But they say staking can bring returns of under 10%, usually 5 to 9%. 9% is not bad when you're talking about a cryptocurrency that's pegged to the US dollar. Then on Esketit, those same crypto investors can earn up to 14% with no fees to eat into that profit. Now, I took a look at Esketit because I'm always curious about these platforms. And, you know, this is one of the probably the websites that has the least amount of information that I've ever seen on a peer-to-peer platform. And there are 0 links. I mean, you cannot even link to any information. There is no contact button, nothing at all. They do have a Trustpilot link over here, which has some reviews on there, but very interesting. I don't know, with that lack of information, I would be a little wary to invest myself. Let's go on. Money & Co. eyes banking license, but peer-to-peer platform will continue. So our friend Nicola Horlick, and she is the big boss woman over at Money & Co., the peer-to-peer lending platform. They say that they're applying for a banking license, and they plan to raise 50 million quid to become a digital merchant bank, and that they will continue to operate their peer-to-peer lending platform. In December of, I presume last year, Horlick told Peer-to-Peer Finance News she would expect Money & Co. to become profitable in the year ending the 31st of March 2022. She hinted this would be a big year for the company, with substantial expansion of its lending book. Now, I'm going to make a prediction here, as I like to do with the old crystal ball, that if Money & Co. does get their banking license, that they will exit the peer-to-peer lending business just like Zopa did. It may take a while, but I think banking is where these companies can really make their money, and peer-to-peer might be a bit of a thorn in their side, especially with expanding. But again, that is just a one of my predictions. What else? Let's have a look at the statistics. Money & Co. I was interested again just to see what they're up to over there, because it's never really been a company I've had much interest in investing in. What can you get here? 7.13% on an A+ loan rating, up to 14.9% on a C plus rating, which they barely have any C plus loans. Most of their loans here are A rated at 7.91%, but they have had 19% of interest losses and 1.28%. You can see some of the expected interest losses here certainly are a little higher than you would want to see, but there really isn't any other information about Money & Co.'s loan book that I could find. So again, very limited information. They do have 2 loans that filled pretty quickly of 250 grand and 77,600. Again, nothing that I could see. Let's see if they have any other loans. So, that's why I make this prediction about Money & Co. probably will exit the peer-to-peer lending market, because there just doesn't seem to be a lot of loans available. And if they're small loans like 250 and 77,000, how can Money & Co. really be a very profitable company? Hence the move into banking, just like Zopa. Anyway, onwards we go. FCA reveals scale of crackdown on financial promotion. So the FCA wants to stop peer-to-peer companies, as we mentioned last week, like LoanPad, offering little financial sign-ups, little extra bits of money for trying out their services, and they want to stop that. Now, I have to have a bit of a rant about this again. I think this is just such a bunch of BS, because you can go sign up for a trading account on some companies. They'll give you free stocks for signing up. Absolute financial promotions allowed when it comes to stocks and shares. But anything outside of what the FCA is comfortable with, they don't want it, and they want to prevent you as a customer from benefiting. And I'm not sure, why they do this. They say it's to stop people from signing up for something that they don't really understand. But, financial promotions are not the cause of a lot of these companies failing. There's actually a story about this from, Ian Anderson, who is the CEO of Archover, said education is needed for investors rather than simple sticking plasters on marketing. So he says the FCA is missing the point on financial promotions for high-risk investments, including peer-to-peer lending. And I totally agree with you, and I think it's absolutely the lack of education, people jumping into something they really don't understand. 50 quid sign-up bonus is not going to make somebody come in for a huge amount of money for something they don't understand. If they're that hard up, then come on, I don't know what to tell you. But I think I agree with Ian. The FCA is really missing the mark on this and going after the wrong thing. So FCA, if you're listening, tighten up your belts. Come on, let's go. I'm in a playful mood tonight. Okay, so I got my fishing t-shirt on. I don't fish, but this is fish more, work less. My friend Sig Taylor at Fish Out Loud. Check out his YouTube channel. Thanks for the t-shirt. Consumer saving and borrowing falls below pre-pandemic levels. Listen to this. This is interesting. The value of deposits put into savings fell from 4.5 billion in November to 2.7 billion pounds in December. And the net flow into both deposits and NSI accounts, for anybody that's not in England, NSI is the National Savings and Investment Accounts, where you can get a very huge sum of interest for about 1.0% on your money. But they're saying that you can also get premium bonds, which is akin to gambling. 3.2 billion compared with pre-pandemic figure of 5.5 billion in the year of February 2020. So less money going into savings and cash and NSI. Now, people are saying this is because of coronavirus. Maybe here's something else. Maybe people are wising up and learning that having cash in a bank account is absolutely useless. I think Ford Money sent me an email this week saying that the interest rate went up to 0.63%. Look, even if the rates go back up to 1%, putting money the way the inflation is right now, I think realistically inflation is way over 5.4%, probably realistically closer to 6 or 7%. You just can't put your money in the bank at 1%. I mean, you're losing just so much buying power every year on it. So maybe people are wising up, and that is why these savings rates are really falling. And maybe the banks are panicking a little bit as people, invest that money into things like cryptocurrency, peer-to-peer lending, the stock market. The banks, they don't benefit, if you don't put your money into savings accounts. So I think that they're starting to sweat. So it'll be interesting to see how they handle that. That's what I think the fall of interest is. LendingWorks removes negative interest rates on 2 or more cohorts. I always think that's a really interesting word, cohort. It means batches of loans. So LendingWorks has been running negative interest rates on cohort loans from 2017, 2018. For anybody that's a LendingWorks investor, you'll know they are closing to retail peer-to-peer lending because it's not working. And they are charging people money to be invested with them, which doesn't work. People want out. LendingWorks said negative interest rates are no longer required for the 2017 and 18 batch of loans, while interest rate diversions to the Shield Fund will continue to be applied to 2019 and earlier cohorts. The 2020 and 21 cohorts will continue to pay the target rate of interest, the platform added. They said the average annual expected return on the 2014 to 2019 cohorts has remained stable at approximately 4.3% for annual for growth investments and 3.7% for flexible. Anyway, who cares, right? Everybody's getting out of LendingWorks anyway. We know we're losing money. It's not a very good investment, so but they are trying to put out some positive news out there, and hopefully they'll just repay everybody. We'll see what happens with that. Zopa, they are officially exited the peer-to-peer lending space. Hold on, I think we have to have a little sound effect for this. Yep, the big three. One of the big three, Zopa, is officially out of the game in retail peer-to-peer lending. Some will be happy about that. A lot of people didn't like Zopa, and they thought, it's just not a really good place to put money. Other people may be very sad and have a tear in their eye at the moment regarding Zopa, but they are officially out of it, and they are expected to go public on the London Stock Exchange later this year, following in the footsteps of other alternative lenders such as Funding Circle and LendInvest. Now let's have a look and see how those two companies have done with their share prices. For anybody that's thinking about investing into Zopa stocks, don't do it. Here we go. Look at this. LendInvest. They are up about they launched at 197.5 and now at 205.6. They're up 4% over what is that? 6-8 months. Not bad. Unless you bought up here at 226, then you're down 10%. All depends. Market buying is so dependent on stocks, case in point. And let's look at Funding Circle. I don't know up here why it says Funding Circle because I typed it in wrong. They're at 100, down from an all-time high of 440. 77% down all-time on their shares. So if you're thinking about buying Zopa shares, be careful. Look at those two numbers. And buyer beware. You don't want to be down 77%. Lend and Borrow Trust to surrender FCA license and to liquidate. This is a company I've, to be honest, really heard of. They had trading losses from 2020 at 1.6 million and trading losses of 1.8 million in 2021. They decided to close their doors and get rid of their license. Smart move. This is one of the big problems. They were offering loans secured by physical precious metals such as gold and silver. Who knows what gold and silver are going to do, but obviously it didn't do a very good job for Lend and Borrow, unfortunately, as they have to close their doors. Easy money. I get asked about easy money all the time. They've said that retail investors were the best thing that happened to them during the pandemic. They apparently saw a lot of money coming out of easy money when the corona... I'm not even supposed to say that. The C virus hit. And they decided to muscle through it and keep their doors open, and they're happy they did because things have gone well. They said, I think staying open through lockdown was the biggest and best thing for us. They have reported a £150 million lending milestone and have returned £10 million in interest payment investments to their lenders. So I'm actually trying to get Easy Money onto the stream to do a live Q&A. We'll see if they respond. If you're watching Easy Money, please come on the stream. I'd like to talk to you. What else? Source Capital acquires peer-to-peer funding and gains direct FCA approval. So this is a new company, maybe, who was operating under appointed representative of Rebuilding Society. That means that they had their license as an appointed representative through Rebuilding Society, and now they have their own license because they acquired... Who did they acquire? They acquired somebody in order to do that. I can't remember who it was. Oh, peer funding. So they acquired peer funding, which had a FCA license, and they will now trade Sourced Capital. So we'll have a look into them. I don't know who they are, what they do, but it's just another option out there if you're looking for another place to put your cash in the peer-to-peer lending field. All right, for everybody who says Bitcoin is such a scam, Bitcoin, but it's used to money launder. Well, the FCA wants to take on cybercrime. Of course, they are concerned about cybercrime, cryptocurrencies, scams out there. There's tons of scams. I'm not going to lie. There is tons of scams out there, but you have to be careful. However, there was a report that came out. It's actually a very significant report by Chain Analysis, and you can go Google this. It's on blog.chainanalysis.com. It came out, I think, 3 or 4 days ago. It had some really good numbers here. Overall, cyber criminals have laundered over $33 billion worth of cryptocurrency since 2017. So that is 5 years, $33 billion over 5 years of cyber criminals which have laundered cryptocurrency, with most of the total over time moving to centralized exchanges. So they're moving that money over to centralized exchanges like Coinbase and Kraken, Gemini. Now, for a comparison, the United Nations Office of Drugs and Crime estimates that between $800 billion and $2 trillion of fiat currency, like the pounds and dollars, are laundered every single year. So let's put that into perspective. $33 billion over 5 years of cryptocurrency laundered versus $800 billion to $2 trillion of fiat currency that is laundered every year, which is as much as 5% of the global gross domestic product. That's a lot of money that's being laundered. 5% of the global GDP. That's everybody who's sending money to the Cayman Islands, to Bermuda, to other places in the world that we don't know. And it's a lot of cash. For comparison, money laundering accounted for just 0.05% of all cryptocurrency transaction volume in 2021. We cite those numbers not to try and minimize cryptocurrency's crime-related issues, because they do exist, but rather to point out that money laundering is a plague on virtually all forms of economic value transfer, and to help law enforcement and compliance professionals be aware of just how much money laundering activity could theoretically move to cryptocurrency as adoption of the technology increases. So yes, it could be a problem, but right now it's a very, very tiny little blip on the radar. What else we got? There's some funding secure loan updates, of course, in administration. What we got here? I had a paltry £50 in this property in Southampton loan, £1.4 million loan, and they have taken an unconditional offer via a housing scheme in the sum of £440,000, and the agents have advised acceptance. So out of 1.4 million, they have managed to accept an offer for 440 grand. I'm not a math expert, but that equates to a pretty good loss. What is that, 75%? What else? This loan is 337 grand. The guarantee has offered a full and final settlement in this matter, which is being considered, given the level of receivers who were put in office prior to the appointment of the ones in there right now, the administrators. Because of the cost, there is no there will be no return to investors. So this one's a total loss. £337,000 just completely wiped away. Like, gone. Yeah, not a good result. So I think that means my £80 plus my £62 of interest will be a tax loss for 2022. Not to make fun of this, I mean, this is just the reality of how much these administrations kind of suck. Let's have a look at this one. This one they sold and the deposit was forfeited, so £71,200 deposit, less costs being $29,750 have been received. So they put it up to auction once, and I think it didn't go through. And now they did it a second time, and it didn't go through. This is a £665,000 loan in Cannon Street, Liverpool. And then this one in Coventry, this is a £503,000 loan. And they have gone to trial on this one. And the sum due from the borrower is £646,300, which they've reached a settlement. And that has agreed to be paid by the end of February 2022. So how much of that 646 will be received? I don't know, because we don't know how much the costs are. Anyway, yeah. Fun stuff when it comes to funding secure and what's going on with them, but those are the reality of those loans that are in trouble. Anyway, I hope you're enjoying the stream so far. Please hit the thumbs up if you like it. We're going to do some trading right now because I need to go back into this trading 2-1-2 portfolio. And I think I'm also considering doing maybe a second stream a week. I don't know. What do you guys think? Would you like to see a second stream? Maybe shorter, maybe 2 half-an-hour streams a week, maybe not. We'll see. But let's take a look at the portfolio. Rustle the papers, so I made notes about what we're trying to do here. We're at £14,963 from our starting point of 5,500, and you can see here we've only got £9,367 invested. We're gonna buy. I wanted to buy too low oil today. I think I sold at 53, and it's down to 49. So we could have gotten in at a discount, but the market's closed in the UK. So let's go ahead and buy in. We got cash here, 5,500 to spend. I want to get back into oil. I think I sold out prematurely out of the oils, so I'm gonna bite the bullet. And I think on the stream next time, or if I do another one maybe early next week, I'm gonna kind of talk about how much money that cost me getting out at the wrong time, because some of these prices have gone up a lot. For instance, Vermilion. Actually, let's look at one. Occidental. I don't know. One of them I sold at 59, and it's now. Which one is Synovus? No, I don't know. One of them was sold at 50, and now it's 59. So that was a bad one. But Tullow was. I think we sold out at a good point. That's 8% under. But let's go ahead and buy a little bit at today's price. Oh no, it's gone up. Wait. Was it up today? I thought it was in the red. I was going to buy some oils that are in the red today, but maybe they're not. Maybe they're not in the red. Anyway, let's buy a little bit. Let's get a little bit of Occidental. They were in. I think they were in the red earlier. I don't know what happened. We're going to put a little bit in. Let's go ahead and get 100 of that. We have to pay an FX fee. Here you can see this is how you buy in trading 212. Put in how much you want. FXC of only 15p, not bad because it's a American stock. Let's go ahead and do that. LPI, not Lloyd's. LPI Petroleum up 1% today. Let's get 150 of that. Oh, not that much. 150 of that would have been a bad mistake. Okay, Synovus Energy. Let's get Oh, see, this one is weird. For some reason, they don't allow you to do it in pounds. Some of them you do. I think like Alibaba. See how you can buy it in pounds. I don't really understand why trading 212 does not let you buy the pounds worth, but let's buy. Let's do 15. So you have to figure it out, right? Let's do 13 of that. Let's go Diamondback Energy. We got to get back into this position. That one's down a percent. Always good to buy on the red days. You know, you feel like you're getting a bit of a discount. So hopefully it doesn't plummet tomorrow. Usually when I buy stocks, they tend to go down the next day. And what else? Too low. We have to go back in. Well, we can't do that, so we'll do that tomorrow. Vermilion down 0.19. We're going to buy 500. So you know, I mean, this is all real money. Vermilion. Should I go 750? Let's go 650. By the way, not financial advice. Don't copy me. So I don't know if these trades are going to work out or not. Okay, so we should have a little bit of cash. Oh, we still have 4,000. Tomorrow we'll buy a good chunk of Tulo. Yeah, so that's good for now, I think. If they were more in the red today, I can't bring myself to buy more of this Comstock. It's down 20%, down another 6 today. It's really getting hammered. This is the time you should be buying, right? When everything is down from its high, down from 10 US down to 8 US, but I don't know. Don't know if I'm willing to shove any more into that. You can see these crypto mining stocks, CleanSpark, Hut 8, just still not doing well because of the crypto market, but yeah, so that is good. Now let's talk about what's going on with these interest rate hikes. I don't know if you've noticed that probably if you've been to try to get a mortgage recently, not only in the UK, because I've been mortgage shopping in the UK, but in the US, interest rates have gone up. And of course, this is because of the Federal Reserve saying that they are going to start raising interest rates. And we all know what happens when, of course, that has a knock-on effect. You're going to pay more for mortgages. You're going to pay more. You might get paid a little bit more in your bank account savings. But before that happened, what we saw was Jerome Powell, our friend Jay Powell. He's not really our friend. He's dug the U.S. into a massive problem. I don't know if it's the Federal Reserve's fault because they're reactionary. They see what happens in the market and then they try to react against it. But I think that it's pretty much their fault. I'm going to go out there on a limb and say yes. The Fed Reserve of the U.S. is pretty much going to cause a big global meltdown eventually when the stock market decides to come down. But they originally were saying that they want to sell off their assets on the balance sheet. They have a huge amount on their balance sheet. Let me show you what their balance sheet looks like. You can go look at this on the Federal Reserve's website. It's pretty interesting. Let's see if I can zoom in a little bit more for you. You can see right here at the bottom, if you go down, the total factors supplying reserve funds. This is in billions, so it's 8,926 billion, which is basically a little bit less than $9 trillion they have on their assets. This is what the Fed does. They have a trading desk inside of the Fed. They can go in and buy whatever they want. They have an OTC trading desk. So if you see here, they have U.S. Treasury securities, 5.7 trillion in U.S. Treasuries. They have notes and bonds here, massive amounts, trillions of notes and bonds. Mortgage-backed securities, 2.6 trillion. This is a disaster. What they've done is bought all of these assets to try to keep the economy afloat, try to keep the stock market afloat, and they're still continuing to do it. Right? You can see here, It has started to go down as far as their buying, but they're still continuing to buy right now. So what they did was they came out and they said, Jerome Powell said, we are going to sell or start tapering these assets. Okay, so what they want to do is get rid of what's on this balance sheet, which is insane. So I started thinking about it, and I was wondering, why is the Federal Reserve talking about interest rate hikes before getting rid of these assets? Because interest rate hikes are like the last resort when it comes to fixing the economy, as far as what I understand. And they haven't been tapering. You know, it's dropped a little bit. You can see here, 8.82 trillion on Wednesday, the 26th of January. It's down from 8.838 trillion, so not really much of a change. But here's the problem. One of the biggest buyers of U.S. treasuries is China, right? China is cutting its U.S. debt holdings. This is a report from back in November, and it's gotten worse since then because of our previous president, Mr. Trump, who China was not a big fan of. And I'm going out on a limb here, and I'll say that because China doesn't like Donald Trump, they said, we're not going to buy any more of your debt. Screw you. You know, America is very reliant on China as the rest of the world. Now, obviously, Mr. Trump is not president of the U.S. anymore, but these have roll-on effects. And these effects have rolled on. And who knows if, Donald makes another run in 2 years. Who knows? But anyway, they've been cutting their U.S. debt holdings. So what's very interesting here, I hope you can see this. Let's see. Share my screen. This is a piece of information. Again, this is on the government's website, and it shows you how much the U.S. Treasury securities that each country in the world holds. You have Japan, which is the biggest of November 2021. I don't know if this has changed, but they hold $1.3 trillion of U.S. securities. And China holds just call it 1 trillion. If you add up the entire world, all these countries that hold U.S. securities, okay, the UK here, by the way, 621 billion, getting paid a paltry return on these treasuries, but they're very safe and they're very secure. That's why these, governments do it. But you have the Cayman Islands. Look at this, 265 billion of treasuries held. All the way down to Colombia, 33 billion. Now, you total it up, there's 7.7 trillion on this entire sheet. So the entire world owns 7.7 trillion total. So my question is, who the hell is going to buy these? Even if you just took the U.S. treasuries of 5.7 trillion, the government says we're going to sell it off, right? Who's going to buy 5.7 trillion dollars of the U.S.'s treasuries? And I have an answer. No one. Because they don't pay any interest. The entire world owns 7 trillion worth. They're not going to be able to sell these things. So what do they have to do? The U.S. government, the Fed, they have to raise interest rates. Because this idea of selling assets isn't going to happen. They may be able to sell a little bit here and there. This is going to really put a damper on the economy when they do raise those interest rates, because what it's going to do is going to have a knock-on effect to the real estate industry. I don't know if you try to get a mortgage and you look at the difference between a 1% mortgage hike on a loan, it can get pretty substantial for your average person. It could be several £100, of interest. Several $100 of interest increases over a month, and some people can't afford that. And we have a lot of people in the UK that are on adjustable rate mortgages that adjust every 2 to 5 years. In the US, you can get a fixed interest rate for 30 to 40 years. It's very much different. But this is going to hurt people in the UK, because once those interest rates are felt from the Treasury of the Fed in the US, it's going to knock on to other countries in the world in multiple different ways. So I think we're in for some economic pain, and this is why I'm saying that the economy is not good like we have been told to believe. There's a jobs report that I think another 300,000 in jobs were lost in, I want to say, January in the US. The economy is not good. So just be prepared. I mean, the idea, the reason I'm telling you this is you really want to keep an eye on what's going on with the debt market and the US Treasuries. That really is the barometer of how things are going to go when it comes to the stock market. And eventually we are going to suffer a monumental stock market correction. It has to happen. I mean, everything is overinflated right now. Real estate prices are overinflated. Stock market's overinflated. It just seems to be a prolonged bubble that doesn't want to burst. But we have to keep an eye on these debt numbers to see what's really going on. A friend of mine says at the end of 2022 is when we'll see this big downfall. I don't know when that is going to be. I don't think anybody can predict it, but it'll be interesting in March to see what happens when the U.S. raises its interest rates, see what kind of a knock-on. There's some people that believe it will have a positive effect on the stock market because there will be some stability and calm. And there's other people that believe it will have an extremely negative effect because people will become fearful of future interest rate hikes, and that it will put a big cooling on the stock market. So we'll see. Little crypto news here, and then we're going to do a bit of Q&A. Payment giant Visa says crypto-related transactions skyrocketed in the first quarter of 2022. Now, bear in mind, this is during a downturn in the crypto market, but they have had $2.5 billion of payments. Get your head around that. I think they do $16 billion a year. I mean, it's a massive amount of payments. $2.5 billion October to December of 2021. That represents 70% of Visa's crypto-related volume for all of 2021. So the first fiscal quarter of 2022 has been a big buying time for people using Visa cards to buy crypto. That's indicative of mass adoption of people buying cryptocurrencies. So in the downtime, people are buying. Let's see, what else? Last piece of news here. 300 community banks in the US are preparing to start offering Bitcoin trading in 2022. So again, this comes down into the adoption of where cryptocurrency is going. This is a report by the American Banker. Around 300 community banks in the U.S. are looking to offer Bitcoin trading to clients within the first or second quarters of 2022 with the help of Bitcoin company NYDIG. I mean, you've got banks from Georgia, Oklahoma. Anyway, again, just another case of how cryptocurrency is being adopted and how you are very early. If you are a crypto investor and you do buy things like Bitcoin, well, I say well done because you're in early. And you're just going to see continued adoption moving forward. Let me grab a drink. Yeah, that's the news. I hope you enjoyed that information. It was a lot to get through this week. Sometimes I wonder if I put too much in because I do try to get under an hour. That's 48 minutes. I was going to take a quick read of the comments, try to get you out of here so you can get that tea and that McVitie's chocolate digestive. That's one thing I miss about England is food, but the problem is chocolate is so good that I have fillings. So when I come to America and spend time here, I don't want to eat the chocolate. It's not that good. A lot of people in the UK say they like Hershey's, but I think it's not good. So I don't like eating chocolate here. Anyway, let's see where you'd all move to. Crypto's falling back again. Facebook has dropped 25%. Yeah. I'm actually glad. I think we sold Facebook. Look back at the history on Trading 212. We actually had a holding of Facebook. Talk about, good timing, right? Where is trusty Facebook? Oh, here we go. 900 and see what we sold out for. $330. Look here. That was just pure luck. I did not know anything. I had no idea that the stock was going to tank. Let's have a look and see what Facebook is trading at. Where are you? 237. Wow. That would have been a big hit. Down 26% today. Look at that. Oh. It's like, here you are climbing the little meta mountain. Yay, I'm doing well. I got some Facebook stock. I'm a happy oh, hold. Oh. Straight down the cliff of death. Right? Talk about volatility. This is something that you just don't expect to see for stock that's such a mega cap. And that's crazy. So, yeah, we got extremely lucky on that sale. There was something in my gut that said don't hold Facebook. I don't know why. Bad buy to begin with. I thought it was a discount at 320, but yeah. Could be a good buy now. Who knows? I don't know. Paul says apparently job figures due tomorrow expected plus 200,000, annual forecast of 300,000 jobs lost. Yep. It's not good. Invest 22 says I'd move to Miami if I was going to move anyway. It's a nice place. Lots of beautiful people. Spain, Australia, Florida. If you like alligators and hot weather, Florida is a good place to be for you. Peter Vince would move to New Zealand. Aki Chap, anywhere where it's warm, cheap, and crime-free. Aki, you would never leave Accrington, let's be honest. You should have written Accrington. Yeah. Question is Patreon worthwhile? Well, I mean, if you feel like if I provide value to you, if you find the financial thing has given you value over the years and you enjoy the streams and you enjoy the content, that's all Patreon is. It's a way to support content creators like myself. You know, I've been doing this since 2015. And everything on the website is completely free. There's no subscription services. This is just a way to have, provide support for very little. So I think it's worth it. I would sign up if it were me for doing it for myself. I'm a Patreon subscriber to other content creators out there that I watch and I get good value out of. So you have to answer that question for yourself. Certainly no pressure. Yeah, so energy, right? Everybody's saying energy costs are going up. Hence why you might want to look at commodities and oil stocks, because I think oil is heading to $100 a barrel US, and the oil companies are going to benefit from that. Paul says he'd go to Florida. I don't blame you. Mike, welcome, Mike Powell. You are late from the pub. What did you have to drink tonight? You seem like somebody who would drink stout ale, something very strong. We should have all applied for bounce back loans. Over £4 billion written off in dodgy loans. One Birmingham businessman registered 6 companies and received £300,000 4 days later. Yeah, it's pretty disgusting. A lot of fraud going on. The FCA is not in the real world. I agree. Mike says platforms should be made to explain how RICS valuations work. How development loans actually lose value for about 50% of the term. I agree. Alan Brooks is here from Pinner, Middlesex. Hi, Alan. Nice to see you. NSI's interest rate on direct savers is 0.35%. Ooh. Zopra is not a good investment. Brian had an email from Funding Circle to say they had sold my defaulted loans. That's good. Lawrence, are you familiar with the mathematical principle of the rule of 72 in estimating the time it takes to double your investment? I am not familiar with that. I will look it up, though. It looks interesting. Could be a problem with Bitcoin. The whale's controlling the price. Look, if you short term, of course, it's always going to be volatile. I don't look at the price of Bitcoin short term. I'll look at it in 10 years, and if I made a bad decision, I'll come back on the stream in 10 years' time and say, hey, I was wrong. But I bought some more. I just keep buying, accumulation. I saw a number the other day, or I heard about it. It was like 56 or 500,000 millionaires. And if every single one of them decided they want to get one Bitcoin, there wasn't going to be a Bitcoin to buy. So scarcity. Sotheby's is accepting Bitcoin as payment for bids on the Enigma, a 555 carat black diamond. Wow. Why not do 2 streams a week, one dedicated to peer and the other to trading and crypto? Yeah, sure. Second stream dedicated to other investments, films, whiskey, NFTs. Yeah, I like that. I am interested in NFTs. I just, I don't really understand them enough to, I just can't get my head around what's going on with them. But it's like anything. Value is derived by perception. And that's just something I can't get my head around. These pieces of artwork that people think were worth millions. But I do think NFTs they're not going anywhere. They're going to provide a way for things like memberships in restaurants and all kinds of different things. You can't highlight a reply. I see them all though. Mike said, have you looked VA midstream stocks versus rather than upstream? I'm not exactly sure what you mean, Mike. Hi, Paul Owen in New Zealand. Welcome. Glad you're here. I don't know what time it is in New Zealand. Has Biden been successful? No. I don't think so. House prices in the UK are crazy high. All the people who bought at very low interest rates could be seriously caught out. Hope not, but could see 2008 again. Yeah, I was looking at buying something down in the Dorset area. Maybe like a buy-to-let. And I've seen the prices go up quite extensively. So the numbers are not making sense like they used to be unless you go completely interest only, which is a risk, but that's true. Hershey tastes like a dog treat. How do you know that? How do you know that? Oh, let me get rid of you. Bybit crypto platform has staking non-avalanche at 17%. This is a reasonable size crypto. Can this be safe? I don't know. Let's take a look. It's a good question. When you're staking through a platform, you're essentially giving them your cryptocurrency, so you've got to make sure that that platform is secure itself. So where is Bybit on the list? See, this is good. If you go to CoinMarketCap here to exchanges, you can look at how much trading volume they do in 24 hours. This is kind of insane if you think about it. So look how much Binance has done in 24 hours. 13 billion US. Get your head around that. 13 billion. The next closest one is Coinbase, 3.2. So almost 5 times as much volume. Let's see who. Some big players out there, but I don't know. Let me try to find Bybit. No. Because we have to look at that. We have to look at the exchange before we could try to figure out if staking is safe. So we got Bybit down here. You can see they're 12th in size. They've traded 217 million in 24 hours. So kind of a blip on the radar when it comes to Binance. So what happens when you stake something like Avalanche? You're giving it to the platform. It's kind of like giving your money to a non-peer-to-peer lending company. Ooh, look, you can get a $20 bonus. No, I don't. I just want to look at your website. Come on, let me look. Okay. So yeah, you loan them your crypto. They loan it out to people who are trading these derivatives right here. This is trading on margin, high risk. These are the traders that are having these massive swings. And that's the risk that's involved. Yes, you might be getting 17%, but they're loaning out your crypto at much higher rates. Sometimes the trading is not as risky because a lot of these companies liquidate people automatically. You just have to know if something happens to Bybit, the platform, your crypto will essentially probably be lost. Just trying to look. Where is the earn? Learn. I'm not seeing their staking here. Oh, here we go. I mean, look at this. This is crazy. So you can actually buy this crypto mix and stake it for 200% APY. That's insane. ETH, you get 1%. Is that a day? What does it mean? No, these are all the different coins that you can stake. I'm not seeing Avalanche. Maybe there's other ones. Yeah, I don't know. Staking, I feel you should do it through, if you're going to stake, do it through big platforms like Binance. You pretty much ensure that a platform that's trading $13 billion of cryptocurrency a day is probably pretty safe. Whereas doing it on Bybit, 217 million, may be safe too. I don't know. But just be aware of the risks. A better way to stake is to do it on a decentralized way that you're not going to get maybe that high interest, but I take a lower interest rate for staking it on my own wallet. So, for instance, you can stake Solana on Solflare on a decentralized wallet. See how the crypto market's doing today. 36. I mean, what a great buying opportunity. I wish I had some extra cash. These numbers are just going to seem like an absolute dream. 36.5 mil. That's right, 36,500 for Bitcoin. This coin right here. I've been looking at this Terra. By the way, major discount. It was $100. I think it was $100 at one point. Yeah, so you can get this on almost just more than a 50% discount. So they have been getting hammered. I think there's some value there if you're into crypto. Again, not financial advice. Market is it's just kind of floundering around at the moment. Yeah, so you can take these stable coins like USDC and Tether, which I personally don't like, but I would stake some USDC coin. If you can find a place, you can get 9-10% APY on these coins, and they stay at $1. They stay pegged almost exactly to $1. So you don't have any fluctuation. This fluctuation you see here is literally where it went up to 1.03. It shouldn't. It's designed to stay right here at $1. 1.04. And then at its low point down here, 0.97. But generally it tends to stick to be pretty much about $1. You see it started to stabilize here. Yeah, you can stake that type of coin. I think it's not a bad thing to have. I stake some USDC. But I would be wary about staking on some platforms. Nexo has stable coins, UK pound, 12%. Surely this is a good punt as no wild price variation. Yeah, I think so. The biggest thing about stable coins is I think they're going to get regulated at some point by the governments, but you know, the government's not going to take your coins. If they were to shut Nexo down from staking, they would just probably say, you guys are not allowed to do this anymore, and you would just get your coins back. So I don't really see a ton of risk. It's platform failure is always, that's always the risk, is the platform failure. Let's see what they're paying. Up to 18%. So if you put in £100 on Bitcoin, you're going to get 12%. That's a lot. That's a lot. Bitcoin usually only stakes for 3 or 4%. So that's a really good yield. Oh wait, that's 36 months. Never mind. There you go. 6.1%. 106. I like staking though. I think if you're going to hold, I mean, if you believe in this stuff, if you're going to hold it, like I have some Polygon. So you can get 11.4% per year on Polygon. If you just want to hold Ethereum, you get 6% on Ethereum. You get paid out in the coin too that you stake. It's kind of like true compounding interest. Luna, you can stake Luna. Get 6% on Luna. And then USDC, 10%. So 10% to be pegged to the pound or the dollar. I would, yeah, I mean, I like that. I think that's great. See all the interest down here. If you want to earn in their coin next, so you get an extra 2%. I don't think that's a good play. Take the earnings in the coin that you're staking. Look at this. You can get 34% on Axie. That's nuts. That's the gaming coin. It's a good way to earn yield anyways. Okay, I think we are going to wrap things up today. Thank you to everybody for joining the stream. We'll be back next, I don't know, maybe an impromptu stream next Tuesday, but definitely back next Thursday. And hope everybody has a wonderful weekend. Be safe out there. Please check out the new video content that's being uploaded on the channel. Every view helps the channel out, helps me out a lot, and I appreciate all of your support, all of your everything. Love you guys. And if you need an idiot's guide to crypto, Robert, there is a crypto guide on financialthing.com. It's Crypto 101. It's right there on the homepage. But that's going to do it for this week. Please subscribe to the channel if you're not a subscriber, and hit the like, and I will see you next week. Take care, everybody. Have a great weekend.